Welcome to another trading adventures recap. The purpose of this recap is primarily for my own benefit to help me to refine my trading strategies. I am happy to say that as of Tuesday, 2 days ago, I began trading live after some year or so of intense study and experimentation. And I'm happy to say that my first day was green, my second day was very green, but today, not so green, actually kind of red. So I'm going to review my trades as quickly as I can to remind myself in the future of things I should do and not do. Just as an overview, this is the trading montage. These windows are all self-floating windows. This is the trading platform, Sterling, with two stocks I can trade. One stock chart, time and sales, level 2. Another stock, the trading montage, the chart, and the time and sales. Okay, and we also have trade ideas, scanners. So in the morning, first thing is you're going to be watching the gappers for what's gapping, and many of you have already seen how this is used by many traders, so I'm not going to go into any detail. And since these things are popping up new stocks all the time, I want to be able to quickly look at the minute chart and then the daily, get the context quickly. However, my favorite tool of choice, and I'll explain why with the trades, is Benzinga Pro. It has a variety of features allowing me to see news in real time. I'm just scratching the surface as far as how to use it. There is this awesome squawk feature that some guy comes on, and before it appears anywhere really, he reads off something, an announcement, some news that relates to the stock in some way. Very, very handy. Only challenge is being able to remember the letters he called out to punch them in if you're not really paying close attention. But the real advantage is to begin to look at the gappers in the morning, and then let's go ahead and take a look at a few trades. I'm going to bring over from my other screen this e-signal charting tool, and I'm going to focus on some trades. So the very first day that I traded was Tuesday, and I'm going to just show the trade just for the sake of discussion. It's somewhere over here. Gone too far. This is on the 15th. The 15th, way over here. Here we go. Alright. So after much ado, I went ahead and hopped in for the first time in my life live. No paper involved. And here's where I got in. Here's where I got out. I had to get out in aftermarket hours because I couldn't fire off a sale. Some switch I had to set, had to call Sterling support. But I finally got out. Of course, I wish I would have waited a little longer. And it's always nice to see where it went after you got out. That could have been an additional 44 cents, 40 cents. Double your money on that trade. Okay, let's go on a Tuesday, or this is the big day, and this is where I want to focus some attention. The secret that I have found is to catch the news. So the first trade occurred right around, if you look down here, right around 8:05, and it went for a nice run, as you can see here. All right, let me make this a little bigger. This is a 1-minute chart, a 15-minute chart. This could be 30 or 60, whatever. The daily. This is the current SPY, which kind of gives you the overview of the market. So if it's dumping, you can get a clue. Of course, Benzinga Pro will probably be telling you that the market's taking a dump. Here's another little news thingy bob, which I have plenty of news outlets, so that's kind of redundant. Anyway, so let's take a look at this trade TBLT, and this is the star attraction of this podcast, if you will, screencast. All right, so I'm going to punch in to news, the symbol TBLT. Okay. Now, of interest, this may have first appeared on a scanner, a gapper or a pre-market mover, I forget. So I can click on this and it brings up this nice little detail page, but for the sake of your viewing pleasure, this is a detailed view of that stock. The idea here is to illustrate how the news had a major bearing on the trade. We're going to go to, it's hard to do it gracefully. All right, looking at the news for Wednesday, right here. Let's see here. I got the wrong ticker actually. I'm looking for, let's just do it this way. It is TBLT. TBLT. And let's just do this first. Wednesday. Okay, right here, 7 a.m. And unfortunately, the Benzinga shows me my local time, which is an hour behind the market currently. So this actually occurred at 6 o'clock in the morning Eastern time. I get my numbers straight. So the trade I took, well, let's think about this. This is of interest, but the point being is that there was some news very early, and here is the market open. Let's just zoom way in, get as clear a picture of this as possible. Okay, now down here, look at the time. Excuse me. Excuse the interruption. So down here, I made the trade 8:05, which is let's see here. Looking at the date here, that's 8 o'clock. That has to be my time. So that's my time, and then the news came at 7 o'clock, 7:04, and I have to verify this. I get these dates confused because of the different time zones. One tool allows me to set this according to the exchanges time, which I believe eSignal is doing that. No, actually eSignal. No, eSignal is allowing me to, because I'm looking at this. This is 8 o'clock. That's the market, pre-market open. That means it's 7 o'clock Eastern, which lines up with the fact that I jumped in promptly after that news. 8:05, 7 o'clock, 7:05 Eastern time. Okay, so the idea is that if the news looks like it's moving, like it's something meaningful, and that has to be refined over time, you get in early. There is some risk, but there seems to be some volume coming in. If you look at the volume as I move my cursor over this green candle, you'll see there's 12,000 shares. So there's some volume, nothing huge. So you can take a starter position, and then as the trade develops, in this case, I was watching it rise. It came and it pulled back, and I took another position right here, added to my position right there. And then when the market opened, people were all staring at it, and they're getting in right here. Here, this line is the open, and it goes ballistic from there. And it comes back down again. So the challenge then is, where do you get out? Because it can come down pretty fast. So as I'm refining my strategy, I'm going to work on something like the following. So it blisters on up, and then it makes a new high. It comes down as usual. It wants to consolidate. Now when it comes back up and it fails to breach this high and instead dumps, that is a sign of weakness. And then you're looking for it to retrace. Well, it fails. Okay, so at this point, this support level right here is now becoming resistance. It can't go any higher. Can't go any higher. So you sell. That is the idea. Now I got out here because, you know, it was definitely showing like it was going down, but in reality it would have been better to get out more like here. So that's a 50 cents difference in price. That could have been quite sizable. All right, so that's the point regarding that trade. The moral of the story is getting in early to look for what's moving and why can allow you to get a jump on the pack, because they're all staring at these scanners, and when these scanners show certain stocks and you get in early, you can give you a bit of an edge. All right, so I'm going to go now and look at a couple of other trades. Let's go to, let's see here. All right, how about we go to this day, TVLT. Yeah, I think we just did that just fine. All right, the first day was a Tuesday, and that was green. Although I had to babysit it. Anyway, That was a bummer, but I was so eager to make my first trade of my career green. All right, so Wednesday was a very good green day. All right, now let's focus on some of these trades because a few important things to make note of. So let's go to when this trade occurred. Oh yeah, this is another example of how the news can play a major role. Now, very, very important to share some insights regarding this one. Okay, news came out, caught it on Benzinga Pro. I hopped in. Of course, I made the mistake of buying in on my paper trading account instead of my live account, and would have made this a green day instead of a red day, all because of this one trade, because of getting in. Now, I got out around here with paper, but as I look at this, I want to review the logic behind when to get out, because what happened was there was news early on, and then over the squawk came an announcement that the story about this study that they had was faulty, and right around here it began to tank. So the news clued me in that there was a problem because it had already gone up from, look at these numbers over here. When I click on this, look at my cursor, it says 0 zeros. As I move it up, it shows me the price that it had gone up. The price had gone up, you know, some $2. Wait a minute, no. The price, yeah. The price had gone up to a high of 230. All right. Now, pre-market is rather volatile, so, you know, as I review this, I want to review. So I had a, you know, what happens is there could be some spikes coming down, and you got to have steady hands because you can, I mean, obviously if it just goes zoom, but you have these bottom feeders that they have these orders sitting in down here, and they come down and they grab them. So if you have a stop loss sitting there, you'll be taken out. If anything, you can have orders sitting, you know, down here so that these come down and they catch them, but they pop back up usually, back to where the price action was currently at. So it goes up, got in at this point, a little late, but it got in, it spiked up, great, it's going to the moon. Well, the next candle couldn't go higher. Now that's typical to have a bit of consolidation. You're just going to come back and look for some support. That's normal. So it comes down, hits that candle right there, bounces. Okay, that's fine. That's encouraging. You're not totally going to lose it. It goes back up. It goes back up. It goes back up. Now, here is where it could not go higher. It could not breach this high. That's a sign of weakness. So here this candle couldn't go higher. Then the second candle went higher, but still couldn't go higher. So it's still, people are shorting it at this point. And that's the idea, is to look for those indicators as a reason to get out. And it could be, you know, it could be wrong. It could still continue, but you're trying to find a reasonable place to get out. Plus, there was news And it may have been that that's why I got out here, because of the news. But if there wasn't any news, this thing comes down, this candle doesn't go any higher. All right, that's further weakness. This candle opens lower, it comes down. This next candle breaks below. So I would say right around here. And that's why I got out. So actually I got out right about where I would get out as I review my logic. So it would have been a good point to get out right there. Okay. And that was the main trade. Now I thought that I made the no, okay, that didn't get in again. Okay. Now let's take another one. ADMP. Now here was a faulty entry. I'm coming in early. There was some news. I forget what the news was. So you have this nice bull pennant, and typically you're looking for a breakout. And a lot of times, I was looking at this higher low, higher low, higher low, higher low. So I saw strength there, and I figured, all right, I'm going to get in early. I was focused on this, and I got in early. But I didn't look at the daily chart. So here's the daily chart. If you look at the cursor as I move over here, this guy was, let me just do this again. All right. Look at over here, the cursor. That's where it had gone to. 333. Right about there. So that should have told me that, you see this area right here? Well, it went down from there. This is definitely a short. It's very, very extended. Now the news certainly can make a big difference. That's why it spiked so high. But I was definitely at risk of a pullback. And in reality, it would have been better to go short. I went long, looking for a break higher. Instead, based on how extended this was, it would have been better to short from this position going south. And that would have been a better option, and you would have a target to take profit where this candle here came down this far, and bingo, look at that. 30 cents. If you bought 3,000 shares, 30 cents, that would have been $900. Yeah, 3,000 times 30%, $900 on that trade going short. So pay attention to the daily before you decide to jump in. Likewise, same deal. Look at this thing is all the way up to 140 over here. That is definitely screaming for a short. So rather than focusing strictly on the pre-market bull pattern, and in reality, I may have been enamored by the news, but this was showing weakness. It went high, it didn't go as high, and so that's a little bit of weakness. It comes down, We have a lower low. It didn't hold this level. I'm too eager to get in. Focused on this pre-market, looking for the jump. That was not good. Should have at least waited for some kind of, breakout. All right. Anyway, but in hindsight, this was a sign of weakness. This is not holding up. This could not close higher. See? I tried again. And guess what? They all went short. Well, that was after the open, but when this failed to go higher, that was a short signal in hindsight. So let's see where that went. Well, so I'm not going to even look and see it. Let's just see where would you take some profit. You could take some profit somewhere. You can just go up a little bit. I'm going to say 90. Let's see where it went. Well, it didn't go down that far. But if you follow some strategy and see that here it dropped, it came up, it didn't go any further down, so it's not showing as much downward momentum. When this thing, it didn't go any further down, so now you're looking to get out. That would be a signal to start looking for a way to get out. So let's just put that right there. 16 cents. If you're buying a dollar stock or so, and let's say you buy 5,000 shares times 16, 5,000 times 0.16, $800 on that short with a minimal risk because you're guessing it's going to go short. It does pop up a little bit, so you have some exposure there. Okay, INPX. Let's see here. Make this as quick as possible. This one has been eating. I made some money on it, but the deal is I've been looking for a bottom bounce, and it just hasn't happened. So I got in around here, according to my notes, looking for it to run higher, and I end up, I forget if I may have even scraped out something, but as I look at this in hindsight, this thing went higher, comes down, doesn't go any higher, so there's weakness right there, came down. So although I'm sitting right here, it does come all the way down. This one right here, again, tries to breach higher. It fails. There is your signal to get out. Well, it comes down pretty fast. So you're looking for a place to get out. So that's where you'd get out, somewhere over there. Certainly don't wait for it to come down the rest of the way and make a loss. Another case where I, again, looking for the bounce, I saw some upward momentum, and as I review this trade, I need to look at the reality that, let me just move this down, and I got out somewhere, I got out over here, just barely eked out some profit. I mean, just barely. If no, I forget. I think I may have lost on this one. Either way, the idea is you get in and you're expecting it to pop. Well, guess what? It's lagging. I mean, this thing comes up, it comes down. Tries to come up again, can't go any higher. Weak, it goes down. It goes up a third time. It fails. Now, after 3 attempts, you know, that could have gone south right there. Again, it goes up a little higher, comes down. Oh, that's encouraging. Can't go any higher. Can't go any higher. It dumps. So, you're expecting it to just go to the moon. So, rather than taking a loss, just cut your loss, get out. It's lagging, it's showing weakness, just get out. Keep some profit while you can. AEZS. Oof. Here's a case again. I get in, and I had a liberal stop. Look at that. I weathered this dump. And then again, you're looking for it to go places. It goes high and it just dumps. Well, you're expecting it to maybe bounce off of a nice support level right there. It does happen, and in fact it did. It did bounce. Like I expected, it would bounce. And your stop loss initially would be, somewhere down here. Okay. Well, so as it comes back, ooh, there's hope. Ooh, but we're going to go to the moon. It dumps. Well, okay, it's volatile. It comes down and finds some support off the 200 SMA line, that purple line, whatever. It goes up. It fails to go higher. It comes down. It fails to go higher on that candle right there. It fails to go higher. Well, that's weakness. You could go ahead and what I wrestle with is having it bounce and continue, bounce and continue. And also the shorts are looking at these failures to go higher. And again here, this failed to go higher. This failed to go higher. So this is again, a chance to get out. Instead, it just went lower and lower, and it can keep going lower. So here's a daily. Look at this. So we're over here. It's definitely some upward momentum, but you could expect, some consolidation. Nice, strong bear candle. This candle here obviously didn't reach higher. This is perhaps a bit of a bear signal that it will come down a little bit first. Okay. Now here's something of interest. Listening to the news on Benzinga, a report came out that Fossil was selling, the Fossil watches they were selling their technology to Google for apparently a watch that Google has in mind. So I hopped in and I got out on this blue line. Okay. Over here somewhere, I guess. So, and it's because I'm looking at this support line as a line in the sand, and it broke against it at that somewhere over here. Now, This is the question, though, leaving a lot of profit in the trade. So the thing is, this is the thing I'm trying to focus on. This is the high of the day, I guess, and it comes down. It's normal. It's tapping the support once, twice. After two bounces, you're going to think it's going to continue further north. Well, it tries, it fails, and as you can see, the bears take that as a signal. At this point, the bears bought it down or pushed it down. It comes down, it's struggling, it can't go higher. Right about here is definitely at least right there. Get out. Get out of Dodge. So what was a 56-cent trade could have been something like a 91-cent trade. Okay, obviously hindsight is 20/20. I drew this line as well across the top and a parallel line across there. Again, double confirmation that that's when you get out. All right. Again, the news. This was my biggest trade of the day, all because of acting on the news. As I was sitting here and I jumped on it, there was another report involving Roku. So apparently Walmart is going to be abandoning their streaming video service. So here's where the news came out. Boom, jumped right in. I didn't make this trade. I was just plotting it to see where it would go. So you'd be in the trade. It comes down. Typical consolidation. It goes higher. More consolidation. Goes higher. Now here's a case where it didn't go higher, but it didn't totally break down. That's the tricky part, is you see this little line right there, and it held that. So you're watching it. So it goes higher. It's struggling. We got three wicks up there. Comes down. Can't go higher. How about one more try? Can't go higher. All right. Look at that candle right there. There's your bull signal. I mean your bear signal to get out of Dodge. It tries to go up again. So the way to get out is when that fails, you could say, I would say, well, I was actually, yeah, right around here. So it'd be $1.10. I bought 500 shares. That would have been a nice 500 some odd dollar, 550 trade. Instead, I got out. I forget where I had this before. Let's see. Huh. Well, actually, no, I didn't take this trade. I was just hypothesizing. Anyway, again, the moral of the story is Benzinga rocks. Okay. Here's a case where they called out this stock as a mover. I'm really uneasy about jumping in when it's surging, but hey, I'm trying to experiment. It's a mover. Anyway, I looked at the daily and I saw a lot of upward room to go higher. So I says, all right. Now the problem was I only I sold at this point, and it's because I was stopped out because my stop was too close, and So as I'm looking at this, you can see this line right here where it came. So my stop loss was a little bit too tight. If I had used this level as a stop right about there, it would have avoided that stop. But then again, I see it came up, it came down. This right here is where, you know, it's failing to go higher. So if I use my strategy, I would have gotten out to at least in the green somewhere around here for a small gain versus getting stopped out. Okay, another one. This one was surging again. Looking for a quick scalp on these. I did make something because I got out right away. This is where hotkeys can make a difference. You're watching the level 2 tape, time and sales and everything, and it's very, very dicey, obviously. This one right here was also one of those last minute. It's moving very fast. You can hardly see it. So very volatile, and this is where hotkeys, again, you're watching it. You're in over here. It goes up, it comes down, doesn't go higher, not a good sign. Comes lower, still holding, comes back up, and then it comes back down again. See, that's so, this is meant to be a scalp play if you're going to just jump in on some momentum, but in reality, that it's a downward trend. So the way that you should trade this is when this dropped and then this failed to go higher, then you would short somewhere over here. Could be short, and your target, could be somewhere over here. Okay. So a little bit of a stop loss up there, but you see how it showed weakness. It couldn't go higher, go short, and then it goes down. Now it comes back up. This is the part that you're getting a little uneasy, but it is a downward trend, and you're still in the green. And then it goes down further and takes your target, or you can keep going until this lower high continues, and then here it's coming back again. You're going to lose some of your target in this case, but if it were to go lower, you'd still be in the trade. So it does this. It comes down further. It doesn't go lower than this, and there's your signal to look for. Is it can't go any further down. Again, it's struggling, so you could actually get out right over here. It's struggling. 25 cents on that short times I don't know, whatever you share you're trading it. If it's 1,000 shares, that's $250. Okay, that is pretty much the recap. It's a bit long. Maybe you're cooking or cleaning in the background and you're listening, taking a peek with one eye. But this is a full day of fighting to learn and refine the tools. Unfortunately, I spent the whole day on this. The idea is to trade profitably first thing in the morning and be done with it. But today I had to take somebody to the airport, so I was a little distracted, but I can't use that as an excuse to take trades. I'm not completely confident in trading. So I hope you enjoy it. If you do, and you've got this far, please click on the like and subscribe buttons. Thank you. Until next time. Bye.